All right, we are on video number. Hold on, sorry, it's been a couple days. We've been a little busy. Again, we're almost finished with this Mastro Futures Trading Blueprint 2.0. We are on video number 22, which is crazy. Last video we went over strategy prep. Again, if you haven't watched that video, I recommend watching that first. I recommend watching all these videos in order. But we're actually, hold on, real quick. We're in the new office, as you can tell. Again, I moved back into my first office because it's a bigger room. We added a little TV into it. I don't know. It's more spacious in here, and I just feel like I just overall perform better in here. I don't know why. It's maybe because when I first moved into this house, I started trading in here. But again, I like this better than the other room that we were in because I felt like I was in a little dungeon. Now we got a little bit more room in here, and it's kind of just like my little man cave. So, yeah, we're in the new office. Hopefully you like the look of it. But again, we went over strategy prep on the last video. Go back and watch that. Today we're going to go over strategy creation. So I'm probably just going to type out a bunch of stuff for you guys on what you guys can think of using for strategy creation. Again, you don't have to follow everything I do step by step. This is stuff that I use in the markets that I recommend using. But again, all the stuff that I teach you guys in the markets, you use those as tools, or what I teach you in the Master Futures 2.0. You use those tools to be able to navigate through the markets. It gives you an edge in the market so you can identify what you're seeing, how the markets move, what they're going to do off this area, and so on and so forth. But again, we went over SMTs, liquidity sweep, breaker structure, highs and lows. We went over fair value gaps, inverse fair value gaps, equilibrium. We went over order blocks. So again, I give you a bunch of information that you guys can use in the markets. Excuse me. Me personally, I just make trading as simple as possible. Again, when I used to trade about a couple years ago, and I was trying to mix so many things together, so many different strategies, so much of just like trying to put smart money concepts with scalping and trend lines and indicators and all that shit. It was just too much and it was getting too confusing. Once I just dumbed down trading a little bit, stuck to just using the concepts that I currently teach, again, trading became much easier to me. I started becoming consistently more profitable over a longer period of time. Again, we still have a lot to grow, but again, I've been getting better overall with my trading with the past 2 years, past year, again, and every other month. So we keep just growing slowly. But other than that, I just want to go over like 2 strategies you guys could use, right? Again, you can make up whatever strategies you want out of this. Use what indicators work best for you. You're going to go back, you're going to back test them, you're going to live test this on demo accounts, maybe eval accounts, all sorts of stuff like that. Again, trading takes experience, and you got to keep growing and growing and learning over a consistent amount of time. It's just not something that's going to just stick to you, and this is the secret sauce. And I'll be honest with you with that. Again, this stuff works in the market, but you got to learn how to use it correctly. You got to know when to use it, where to use it, what price is going to react off this and that. And again, then you'll start growing as a trader over time goes. The more experience you get in the markets over a long period of time. It's just not something that's going to click within a month or 2 months or 3 months. Your strategy might click, but again, then you're going to come across psychology, risk management, emotions, money management, all that stuff. And I say that all the time in my videos. More stuff is going to start coming into becoming more profitable in trading. Again, it's not just having a strategy. You need to have multiple things to become profitable in the markets. And that's, again, at the stage where I'm learning. Again, it just takes time to grow. Again, you're gonna build your accounts. You're gonna wipe them. You're gonna build PA accounts. You're gonna wipe those. You're gonna get a payout. You're gonna wipe those. All your losses and all your setbacks are the stuff you learn from and helps you grow as a trader. I feel like to become good at a trader, you have to lose, you have to blow accounts, you have to lose money, you got to get scammed, you got to do all this stuff. Again, I'm not saying you have to do all that stuff, but I really, truly believe that's what makes good traders at the end of the day, because they keep going, they don't give up, they keep learning, they keep adapting, and they keep learning from their mistakes over time, and they just keep getting better and better and better and better if they keep learning and growing. So let's jump into strategy creation. I'm going to stop talking so much. Again, I just got back from the gym, so I'm freaking high on caffeine, if that makes sense. But, yeah, let's just jump right into it. Let me take a sip of water real quick because it gets a little hot in this room. I'll be totally honest. But just want to make sure we're filming. Audio's on. All right, perfect. You guys can see everything. All right, first thing I want to go over. If you haven't watched all my other videos on YouTube, go back and watch those, because then this will make sense. I'm just going to show you guys step by step what you should look for, and then in the next video on part 3 of strategy creation, we're going to go over in the live markets of examples of this stuff working, right? Cool. All right, so let's get typing. I got my little notes out here too, just so I know I can get everything. I prepare I prepared for you guys. All right, so first thing I want to do is number 1. That's not a 1. Mark out. We'll just do high time frame HTF draws of liquidity, right? All right, meaning the 1 hour / 4 hour can be good. All right, so step number 1. You're coming into the day, you mark out market open, you're getting your bias, blah, blah, blah. First thing I'd recommend doing, marking out your high time frame draws and liquidity, right? You want to mark out your high time frame lows and highs, like your 1 hour highs, 1 hour lows, 4 hour highs, 4 hour lows, all your draws and liquidity where price can react off of. You can even mark out your 1 hour fair value gaps or 4 hour fair value gaps if price retraces back into them, shows buying pressure. Let's say if it's a bullish fair value gap, when you scale down to the lower time frames, and then you continue scaling down a little bit lower, find your entry, right? So first thing you want to do, mark out your high time frame draws and liquidity, right? Right here for this strategy, I would just recommend marking out your 1 hour and your 4 hour draws. Don't worry about the fair value gaps yet. We'll go over that in another video by itself using fair value gaps on higher time frames. Maybe we'll use that in like a daily bias video, but again, I just want to focus on helping you guys create a strategy with the steps we taught, right? Number 2. Number 2, I would recommend scaling down into the 5-minute time frame after you mark out your draws and liquidity. Wait for market to open, and then we want to look for a break of structure. So we'll put scale, to the lower to a lower time frame. Let's just go. I'm gonna go over for this one. I want to just go over 5-minute again. There's ways we could scale down right to the 1 minute, but that's when we're going to start using SMTs and stuff. Right now, let's just focus on scaling down to the 5-minute time frame once you already mark out your draws and liquidity. Let's go down to the lower time frame. We'll do 5 min. Bang. Step number 2, right? We scale down to the 5-minute time frame. We wait for market to open. What do we want to look for after that? Wait for one of the high time frame draws. We to get swept. All right, we're on the 5-minute time frame, right? What are we looking for? We're waiting for a high time frame draw and liquidity to get swept, right? We're looking for a 4-hour high. Market opens up. We're coming towards that 4-hour high, right? What are we looking for on the 5-minute time frame? Once we get on the 5-minute time frame, we see market comes up. We come up to that 4-hour high. What do we want to look up after that? So we know it's a liquidity sweep, right? We want to stay in the 5-minute time frame, and we want to see a 5-minute break of structure to the downside, right? So step number 4, we want to look for a break of structure to the downside on the 5-min time frame. Right? On the 5-minute time frame. Right? Break of structure on the 5-minute time frame is going to show us that, hey, the market might want to change the trend's direction. We want to target this draw on liquidity, right? We target these 4-hour highs. If we break structure on the 5-minute time frame, we're probably going to look for short positions and target sell side liquidity below or high time frame fair value gaps or maybe a 15-minute fair value gap, something like that, right? That's what what you should be looking for. Again, this is not the only strategy you're going to be looking for based off this off of the confluences I taught you. This is just going to be something to help you learn the steps of following just learn how to follow a set of rules and be able to identify what you want the market to do. And if it doesn't do that, you don't take a trade. So let's say you're on the 5-minute time frame. We come up and we don't break structure on the 5-minute, right? We come up and it looks like we sweep out those 4-hour highs, but we come down on the 5-minute, we never break structure, and then price continues up, right? We want to wait for that 5-minute break of structure to the downside, right? And then we're going to want to scale down to a lower time frame, like the 1-minute time frame, and we're going to want to look for our continuation confluences. Or even if it's not even, you're not comfortable enough of looking for just a break of structure on the 5-minute, you can wait for a 5-minute break of structure, then a 5-minute retracement, right? So we can let's do 4B. This is optional, right? Look for a 5-min. I don't even know if I spelled that right. How do you spell retracement? Did we spell that right? I think so. Look for a 5-minute retracement after break of structure, right? If you want to. Again, you don't have to. That's something I do sometimes if price wants to, hold on one second. If price wants to break structure to the downside and make you more comfortable to look for that 5-minute retracement, scale down to the 1-minute time frame, and then you can look for a high time frame draw on liquidity, get swept, scale down to the 5-minute time frame, look for a 5-minute break of structure, then you can look for a 5-minute retracement, right? That means if we're continuing down, we want to look for a 5-minute candle showing a bullish candle. If we get a bunch of bearish candles down, right, we break structure to the downside, then we get one candle up after that. There's our little 5-minute retracement. Number 5, scale down to 1 min. Look, okay, and look for our continuation. Whoops. For continuation confluences, right? We can make sure my spelling is correct. I think we're good. All right, and then we look for our continuation confluences, right? What are our continuation confluences? Fair value gap, equilibrium, order block gets hit. We get a reaction off of those, price is most likely going to continue in the down direction, right? So scale down to the 1-minute time frame and look for your continuation confluences. Number 6. And get that will get respected. Then that'll be entry. Ooh. Entry, and you're gonna, that'll be entry. Let's do this. Hold on. Sorry. Again, this is more of a typey one. Number 6, then we'll do for number 7. Target draws. Let's do target high time frame. You know what? No, I don't want you to say it. Target draws of liquidity, right? So what could we target? Let's do, we'll put this in parentheses. You could target the 5-minute, let's say. 5-minute lows or highs, 15-minute lows or highs, or 1 hour and 4-hour draws. Bang. Don't need a period. All right, bang. That should be pretty good. Let's make this a little bit bigger so you guys can screenshot that. You'll be able to see it. It's a little bit stretched out because I've got this big-ass screen. All right, look. Number 1, mark out high time frame draws and liquidity, right? 1 hour, 4-hour highs and lows. Then what do? We wait for market open. We scale down to the lower time frame, the 5-minute, right? What are we looking for? We're waiting for a high time frame draw to get swept, right? So let's do the opposite direction now. Let's say we come down, market comes down on market open. We sweep out a 4-hour low, right? We're scaled down to the 5-minute time frame. What do we want to look for? We look for a 5-minute break of structure to the upside. If we get that 5-minute break of structure and you don't want to wait for the retracement, it's totally up to you. You're going to go back and back test this stuff before you just put it into the live markets. But you can look for a 5-minute break of structure, scale down to the 1-minute time frame, and look for your continuation confluences. Once your continuation confluences get hit and respected, then that'll be your entry. You target the draws and liquidity like 5-minute, 15-minute, 1 hour, and 4-hour. Hold on one second. Can I call you back in 2 minutes? I'm filming a video. I probably won't be able to. I got to film. Sorry about that. But again, right? But let's go back to number 4. We can look for a high time frame liquidity to get swept. We're scaled down to the 5-minute time frame. We see our break of structure, right? We took out sell side liquidity. What do we want to wait for to get a little bit more confirmation, to get us more comfortable? We wait for that 5-minute retracement. We get that 5-minute bearish candle down, right? Because if we sweep sell side liquidity, we break structure to the upside. It's a bunch of bullish candles. Before we scale down to the 1-minute time frame, we can wait for that 5-minute retracement, which is that 5-minute candle to close bearish. Then we scale down to the 1-minute time frame, and then once our continuation confluences get respected, you look for your continuation, fair value gap. Here, we could do this. Look for continuation confluences. Let's do this. Fair value gap, EQ's equilibrium, and we'll do order block, OB's order block. so you guys know, so you can screenshot that. Continuation conflicts is fair value gap, equilibrium, order block. Once those get respected, we would end up seeing, hey, let's say price comes up, we broke structure on the 5-minute time frame, right? We got our retracement. We're scaled down to the 1-minute time frame. We see price, let's say, come down into a bullish 1-minute fair value gap. We see buying pressure out of that fair value gap. Bang, that's our entry. Again, we're going to go over take profits and stop losses in the next couple videos after we do the strategy creation. That's our entry. What are we going to target above? Our 5-minute highs, our 15-minute highs, our 1-hour highs, or our 4-hour highs. It matters what risk to reward they're going to be, right? But again, let's say there's a 5-minute high at a 1 to 1.5 risk to reward. Maybe that's where you want to take partials. Maybe there's a 15-minute high at a 1 to 2. Maybe you want to take more partials there. And there's a 1-hour high at a 1 to 2.5 risk to reward. And that could be your final take profit, you know? But again, we'll go over take profits and stop losses once we get past the strategy creation videos. So again, how much time we're at? We're at 16 minutes still right now. Okay, look, we can go over another one real quick. It's basically going to be the same thing, right? So I'm going to copy this just so it could save us some time. You guys don't have to watch me friggin' type again. Look, we're going to copy this. We'll put this to the side just so you guys still have it. Here's something else you guys can do that I always do for like before I get my daily buys and stuff like that. So instead of marking out high time frame draws and liquidity, mark out session highs / lows. What does that mean? London session and Asian session. Alright. So as we can see, sorry you can hear the dog barking in the background, but number one on this would be mark session highs and lows, right? London session high, Asian session high, London session low, Asian session low. Mark those out. It's basically the same thing of marking out high time frame draws and liquidity, right? What are we going to do? We're going to scale down to the lower time frame, like a 5-minute time frame. We're going to wait for one of the not the high time frame, wait for one of the, to get swept. And then once we see that they're going to get swept, again, how do we know that it's probably going to be a liquidity sweep or just one of the session highs gets swept, let's say. So price comes up, we're coming up on market open, right? I'm sorry I'm talking so fast. I got all kind of caffeine in me right now, and I'm obsessed with this shit. But let's just say market open, we come up to, let's say, London session highs, right? What do we want to look for? We want to see a break of structure on the 5-minute time frame to show us that it's going to be a liquidity sweep, and then we want to target London session lows or Asian session lows, right? If they haven't been swept yet. So you wait for a 5-minute break of structure. Again, you can wait for that 5-minute retracement if you like, but again, if you want to just wait for the 5-minute break of structure, that's totally up to you. You guys are going to go back and back test this. I already said that once, so just figure out what works best for you. I know that's kind of hard for me to say, but again, you're going to notice over time what entries work best for you and stuff like that based off your risk to reward and all that, okay? So look, we're going to wait for our break of structure in the 5-minute time frame. We're going to scale down to the 1-minute time frame. Look for our continuation confluences, like the same thing. Fair value gap, equilibrium, order block fill. Once your continuation confluences get hit and get respected, that's your entry. We can target draws and liquidity, like the same thing. 5-minute, 15-minute, 1-hour 1-hour lows in this instance that we're going over. 4-hour lows, and then session, we'll put, so you guys can screenshot that, session highs or lows. So again, that can be another strategy you can make. So screenshot this, go back test it. This is going to be, this is an example on how you guys can create strategies, right? And a system to follow. We're numbering them out, like 1, 2, 3, 4, 5, 6, 7, and stuff like that. Because again, when you're in the markets, you're going to be like, again, you're not just going to have a little checklist. You got to have that little checklist in your brain. You're going to be like, all right, we marked out our high time frame draws and liquidity, right? Step number 1. Now we know what to do from here. We scale down to the 5-minute time frame. We're going to wait for one of our high time frame draws and liquidity to get swept, right? That we're waiting, sitting on our hands, waiting for a price to do what we want it to do, right? If it doesn't, we don't trade. We don't go into the markets today. We have another day tomorrow. We have a whole nother week. We have a whole nother month, right? We can take another trade another day when our setup presents itself. But we're going to scale down to the 5-minute time frame. What do we see? Price comes up to one of our high time frame draws in liquidity or our session highs and lows. What do we want to see off this area? Right? We want to see liquidity sweep, right? Because we're trying to target this whole reversal. So what are we going to look for? We're going to look for our 5-minute break of structure. Once we see that, bang, another one checked off, right? So far, we're looking good. Another one checked off. Then what do? We see we get a break of structure to the downside. We scale down to the 1-minute time frame. Sit on our hands and wait. We see a fair value gap, an order block, or equilibrium. We see one of them form. We see that, hey, price is still continuing where we want it to go, right? Let's say, for example, if price took out a 1-hour high, we get a 5-minute break structure to the downside, and we want price to go down. Let's say on the 1-minute time frame, we break structure to the upside for a little bit. We'd want to wait for a 1-minute break of structure to the downside first, then use our continuation confluences, right? So we see our fair value gap get formed. We see price come into it. We get selling pressure out of that fair value gap. That would be our entry, and then bang, entered in. There's 4 or 5, whatever you want to do, 4 or 5 confirmations that show you, hey, I can enter this trade. This is based off my rules. This is based off my system. If it plays out, that's awesome. If it doesn't, then the market's going to do what it wants. Maybe you were wrong. Maybe you did something wrong. Or maybe the market just didn't want to react in that way you wanted it to, right? Because it's not going to do what you want it to do. The market's going to do what it wants to do. So then, after that, we're in our entry. We'll target our draws and liquidity, like 5-minute, 15-minute, 1-hour, 4-hour, or session highs and lows. It matters what way you want the market to go and what draw and liquidity got swept. But again, this can be 2 strategies you can use in the markets that can help you consistently follow a plan over the long term. Again, is this going to present itself every single day? No, that doesn't mean you force a trade just because the market didn't do what you wanted it to do. But when the market does do what you want it to do, and this setup presents itself, you're going to know what to do, what trade to take. You're going to be confident because, again, you've went back and back tested your system, and you know that this can work, and high probability trades can be taken off of a strategy like this, right? Again, over time, you're going to build up more experience in the markets, and you're going to be able to trade more strategies based off the same system and the same confluences and all this stuff like that. But again, focus on one first. Focus and prove to yourself that you could follow a system, follow a set of rules, and overall follow a game plan for your long-term success. So literally, here's 2 strategies that I've tested, I use on a daily basis. If I see it, I take it. This is a high probability setup right here. Again, this gives you an edge in the market. What we want with the strategy is an edge in the market. This can give you that edge. Is it going to work 100% of the time? No, but maybe it'll work 70, 75% maybe 65. I don't know what it will. It matters how well you are at sticking to your plan and your rules and knowing, hey, this is what happened. I could see it. This is the game plan. If all my rules check off, we're going to take that trade, and the odds are in our favor that it's going to play out, right? So, again, write this down, screenshot it, go back and back test it. Don't just freaking hop into the markets, put a freaking $1 million into a live account and say, all right, I know what to do. This is going to work. No, go back and test the system. See what works best for you, right? See how this plan works for you. This is how I use it. This is what I look for. Maybe you want to look for just 1-hour liquidity sweep, right? Scale down to the 5-minute. Look for a break of structure in the 5-minute. Scale down to the 1-minute time frame and only look for a fair value gap getting respected, and that's your entry. You don't want to use equilibrium or an order block, right? Because those don't make sense to you. Those don't work well with your trading strategy. You don't understand them as well as just using a fair value gap. So again, go back, test these. Do what works best for you. Figure it out. Put in the work. Put in the time. Put in the effort. And again, over time, you'll just get better you'll get better over time, right? It's just like anything else in life. Put in the time, put in the effort, put in the hard work, and it'll show over a long period of time. Trading is not a it's not a get rich quick scheme, guys. All these people think it is, but once they actually get into it and they see it's hard work, then they start quitting. They really don't want it. It's how bad you really want to become successful in trading, and you're going to do what is required to do that, right? And it's a lot of hard work, it's a lot of failing, it's a lot of losing trades, it's a lot of losing money, and that's going to happen for a couple of years, and you can't be hard on yourself. You got to figure out your system, figure out your strategy, figure out your psychology, figure out your risk management, figure out your money management, your emotions, all that stuff, and I'm literally putting this all in the Blueprint 2.0 for you guys when this is all finished, and girls. So again, this is good, solid information. Literally for free on YouTube. Some people teach this stuff too, but again, this is what I literally first started trading with and hitting good trades with. So this is what I think is best to go back and just, again, I went through all my notes. I used to hit good-ass trades with this, and I still do. This is a good place to start to show you guys that trading is actually possible and you can hit high probability setups if you stick to a game plan, right? It's not, you see two of the confluences, right? You see the market going in your direction, right? We sweep a draw on liquidity, we get a 5-minute break of structure, but we never get that 1-minute confirmation. That means you don't take the trade. Again, you can miss out and price is still going to go in the direction you predicted it, but then you're getting FOMO. You want to get a high probability setup. Wait for all your confluences to hit first, then enter your trade. You don't just rush into a trade because you see it going in your direction. Wait for all your confluences to line up that we have marked out right here. You can write these down on a piece of paper. You can screenshot them, put them in your notes, whatever. Follow them, stick to the system, and when they do line up, confluence for confluence, like literally, like all 1, 2, 3, 4, 5, 6, 7 of them, whatever we have here. Once they all line up together, then you take the trade, right? You don't just see a liquidity sweep. We don't get a 5-minute break of structure. You scale down to the 1-minute time frame. You see a fair value gap fill, and then you just enter right away and skip the other part of the rules. Again, you're going to be able to develop more of trading skills down the long term where you can scale down to the 1 minute off a high time frame liquidity sweep, but that's where like SMTs and stuff come involved. And we're going to make a video of that in the future, I promise. But again, I want to start here just with something simple, a rule system you guys can follow, a strategy. And again, you can build off of it, build your own, use the confluences I teach you, see what works best for you when you go back and back test that. And I promise you, if you put in the time and you put in the effort and you study this for a while, this will be something you can use in the markets every single day, and it'll just be something easy that clicks with you. All right, good. How long was that? 26-minute video. 26-minute video. This is literally free sauce, like for real. Like this is good information. This stuff works for me. The strategy works for me. I don't know what else to say. And the Discord is still free. We have about 15 seats open. If you want to join the Discord while this is being posted, again, people are probably going to be watching this in the future. But again, the Discord is still free. We're getting to 200 people first before it becomes a private community. Because again, in the Discord, I do in-depth trade recaps, which I literally go on my iPad, get the Apple Pen, and just draw things out, explain what I saw, this, that, my emotions. It's like an upgraded version of the trade recaps on YouTube. It's like trade recaps on steroids. And we do free classes twice a week. We answer any questions you want. We just want, it's a good community to help each other grow, be around good traders, and overall just chase our dream as traders and help support each other and do the right things so we can all achieve our goal in the future. So again, I appreciate everybody who's liked and subscribed. Again, put that little bell thingy on. We're almost done with the Master of Futures Trading Blueprint 2.0, and this is going to be a bunch of good information. This is for beginners, for a little bit more experienced people, people who are stuck in a hole and can't figure a way out. Again, this is good information to help you guys learn, to help you become a better trader in the long run, and you'll be able to see things better and understand the markets better. All right, appreciate it. Have a good day. Hope you enjoyed this video. Hopefully you learned a lot, and we'll see everybody later. Thank you.